Hey guys, this is Javi with Javier Hurtado Realty. I have a special treat for you guys. I actually brought on one of the best lenders here in Boston, Massachusetts in general. I have Sebastian Cordoba with Guaranteed Rate, and we're going to actually do a Q&A with him, ask him a couple of big questions that people usually have at this time. Sebastian?
Javi, thank you so much, man. I appreciate you having me. It's an honor, and I'm super excited of answering all the questions.
Awesome, awesome. Well, guys, all this information is in the video right there, but I'm also going to include all the links and every way that you want to contact him. I'll include it into the video and into the description below. So, guys, first things first, the first question on the list here, Sebastian. So, I have a lot of borrowers that are actually self-employed. So, they own their own business. They're actually realtors themselves, or they're just like people who want to own their own business. Like, what do you recommend for them? What's the way that they should go about things?
Oh, man, I love it. Great question. And one of my favorite topics, right? Because when you're self-employed, it's a double-edged sword, right? So if you declare too much income, you're going to have to pay too much tax, right? But in
Hmm.
the eyes of the bank, well, you're going to be able to qualify and buy enough home, right? Vice versa, you declare little income, well, yes, you pay less tax, but you're not going to be able to qualify for much home, right? So my suggestion is first, definitely work with a CPA, an accountant, somebody who specializes in tax preparation. But more importantly, if you are able to connect your loan officer with your accountant and yourself, right? That way, everybody's reviewing the paperwork together. And more importantly, we're making sure that you're getting set up properly to be able to buy a home next year.
Okay, good to know. And for self-employed people, like, what do you recommend? Should they put more money there? I mean, obviously that's with the accountant, but
Yeah.
if they want a higher down payment, is it usually where they have to declare more money on their taxes? Is that usually kind of rubric?
Well, good question. So the way that we qualify with a self-employed borrower is we do an average of 2 years, right? So we look right now, we're looking at your 2021 and 2022 tax returns, whether that's just your Schedule C profit and loss, or maybe you do 1120, 1120S's corporate, tax returns. We do a 2-year average, right? So it's very important for that income to be increasing. But there are some loan programs out there, for example, conventional loan where it allows you to use only 1 year of your tax returns, right? But that's if
Oh,
an accountant, that's if an
I
accountant
didn't
or
know
a
that.
CPA can certify that and can make it official and say, yep, Javi's been in business more than 5 years ago and he's in good standing with the IRS.
All right, awesome. That's good to know. Guys, I didn't know that either, so that is good information to get.
Yeah.
All right, so now there's a lot of talks in this world of real estate of DPA, aka down payment assistance. Everybody's raving about it. Can you tell me a little bit more about these down payment assistance programs and what your take is on it?
Yes. No, I love it, man. I mean, if you need down payment assistance, if you don't have enough money for the down payment and the closing costs, yeah, and you can qualify for one of these loan programs, great. Yeah, we can work with any down payment assistance programs. For example, if you're looking to buy in Lawrence, Lowell
Hmm.
might have some funds, or in Boston, like you talked about in this next generation, next year, there's a couple of different grants that are coming in. We can work with all these programs, right? But there are other programs, for example, where you might not get the down payment directly from the city that you're purchasing and buying in.
Okay.
Maybe you're using a loan program, for example, mass housing, right? So with mass housing is instead of you putting down 5%, well, you can actually get up to 10% of the purchase price, or 50,000 or 30,000, depending on what city, whatever's
Uh,
lesser. But you can get that to help you with the down payment and the closing costs, right?
oh.
The neat part about it is it really is, it works almost like a grant where there is no monthly payment because it's 0% interest, and then it's
Mhm.
forgivable after a certain amount of time.
So let me get this straight. There's certain grants that you can get up to 10%, and certain grants that they are forgivable after a certain amount of years. So essentially, you're getting free money from the government for being a homeowner.
Exactly. So being a first-time homeowner, you have the ability to get down payment and closing cost assistance, and it's all financed, and it's forgivable, right, at 0%. So it's beautiful.
Holy smokes. Holy smokes, guys. This is good information. Oh my God. Now, we're gonna be on this topic of homes right now, the down payment. Now, I think this is a good time to shift on another and a final question that we have is there's this whole talk about 5% on down payment on multis, and I think that's incredible. Could you tell me a little bit more about that and maybe some like some issues people may arise with that kind of thing, maybe?
Yes, good point, man. So yeah, for example, right now, if you were to purchase a home, let's say with an FHA, a multifamily or a single family, that's 3.5% down, right? But Fannie Mae is coming out in November where you're able to purchase a multifamily home as long as it's your primary residence with only 5% down, right? So what does that do? It allows you to purchase a multifamily home with a conventional loan, 5% down. It passes the self-sufficiency test, right? Which is a beautiful thing. Now, one of the issues or one of the parameters that this loan program has is that you can't go over a certain income limit, right? For
Okay.
example, Freddie Mac has an income limit where you can't go over 80% of the area median income. We're still technically waiting to see what Fannie comes out with to see if there are income limits with their new 5% down.
Okay.
But instead of waiting till that happens, we can actually still help you right now purchase a multifamily home with Freddie Mac, only 5% down, and it's a conventional loan. So we can already do it.
And is that exclusive for first-time home buyers?
No, actually, no.
Oh.
So for example, you can own let's say a 3-family home, okay?
Okay.
Or 2-family home. Let's go with 2-family home with an FHA, right? But now you want to buy your single family home, okay? Then you can purchase it with a conventional loan with 5% down. Or let's say now you own a 3-family with FHA, okay? You want to buy a 2-family with a conventional, you can purchase it with 5% down as long as it's your primary residence and as long as you don't go over that 80% area median income.
Wow. So there are a lot of options for buyers right now.
Yes, it's just a matter of connect them with the right team, the right professional that, has the products, has the knowledge, and is willing to help. That's all.
Fantastic. I'm glad to hear it. I mean, is there any words of wisdom you can give to everybody here right now who are either first-time home buyers or want to get their next home, etc.? Just any buyer in this market right now. Any advice?
Yeah, man, absolutely. I want to say is, obviously understand the numbers, right? So if right now it makes sense for you to get into a home, right, versus paying rent, which is always better owning. But if that monthly payment, that mortgage payment is comfortable, right? Picture that as a worst case scenario, right? Because what happens, hopefully next year, or whenever the market changes, that the market shifts and the rates drop, right? Then you can always refinance, right? What we always say is don't marry the interest rate, marry the home, because the home will build up value where you can always refi out of that rate to a better situation, right? So you've gone from the worst case now to a better case. You're saving money per month, you build some equity in the home, and you're in that home, you're building equity, right?
Yeah.
So if it makes sense right now to get into a home, right now is always the right time to buy.
Yeah. There's always the right time for the person themselves. Yeah, I agree with that 100%. And the age-old saying, like you said, I think you talked about this: marry the home, don't marry the rate. That's
Yes.
how it is. So, guys, and hey, Sebastian, thank you so much for joining me on this webinar. Guys, if you have any questions for Sebastian, if you guys want to talk about rates, down payment programs, or even, you want to buy an investment property, whatever it may be, you guys will have all the information attached to this video below. His information is on the screen, which is actually very intelligent. I probably should do one of those. And I'll see you guys later.
Javi, thank you so much, man. Appreciate it. God bless.
Thank you, brother.